Hey guys, how are you all doing? This is Frank from Altcoin Buzz. Here is my bald head for the first time ever. So you've heard the voice in the videos. I figured it was time to show my face. I want to create a more personal connection with you guys. I personally enjoy seeing the people who I'm listening to. I hope you feel the same. I've been making videos for a few months now. And again, I just really want to get to know you guys. I want you guys to get to know me. I personally don't like it talking to people who are sort of anonymous and who hide behind a wall or a facade or anything like that. So, here I am. I'm Frank, coming to you here from sunny Bali. I have a beautiful view over the rice fields here. But of course, we're not here to talk about sunny Bali or the rice fields. We're here to talk about cryptocurrencies. So let's get started with Ethereum. So before I start talking about what we're going to discuss today, which is not going to be super fun, especially for hodlers, I just want to point out the fact that this is an exceptional opportunity in time, not just financially, but in terms of technology, in terms of how we can change the world, how we can empower people. I mean, these are incredibly exciting times. Ethereum, Bitcoin, cryptocurrencies, they have the power to absolutely revolutionize the world. I 100% believe it's going to happen. And although I spend a lot of my time looking at sort of short to medium term price action and what might happen, you have to keep in mind the long-term fundamentals here. If you're a hodler, just don't listen to this, basically. Don't concern yourself with the potential for a short-term correction. Don't think too much about the price, just hodl, But of course, if you are trading, then this video might interest you. So in terms of Ethereum price, we had this nice breakout of the $365 level, and here we're on the monthly chart. You can see that we've had a previous support over here in April 2018, resistance in June 2019, and then we broke through it here. Now, unfortunately, the month has not closed yet. We have another 7 days on this month, and it is possible that the month actually closes below this level. Now, if that happens, this is not going to look great because this is a very critical level, this blue line. Actually, I'll take this one out to make this even clearer for you guys. So you see this blue line here, it's a very critical level. It marks the previous high at 365, it marks a previous low, and we really want to stay above this if we're going to get bullish for a new move up to, for example, $500 or $800. If you enjoy this content and want to see more of it, don't forget to subscribe, like, and hit that notification button as it really helps to support the channel. Before I get started, I just want to let you know that I am not a financial advisor and that trading and investing presents financial risks. That being said, as much as there is a risk of breaking down below this, the weekly time frame still looks pretty good. So in a previous video, I said it was extremely unlikely that we had a weekly close below this level. That was on the 10th of August. That was on this candle, which indeed did close very well above the $365 level, even the $400 level. But now, of course, we've had a scary week. And that's scary because it's a bearish engulfing candle. So what does that mean? That means that for this current week, we've given away pretty much all the price action that we saw in the past week. And that's marked by the top of this candle being the open at $434, coming down to the close of $391 approximately. And this is all the growth that we had in the past week we've given back now. So this is typically a bearish signal, but it should not be taken all on its own. So for example, if we are above what should or could be a major support level, in other words, the $360 level, you don't want to use this as a signal sign by itself and say, oh, well, we have a bearish engulfing candle, therefore we're going to have a big retracement now. And then, of course, there's the fundamentals. There's the whole DeFi boom. There's all this usage happening on Ethereum with yield farming, with the DEXs, with Uniswap, with lending. Bitcoin broke into a bull market. So I would not be bearish right now. So I'm going to tell you briefly what my plan is or what I've been doing. So I was actually accumulating Ethereum perpetual futures for December between the sort of $400 and $380 zone. Now, I do personally think that there is a chance that we come down to the $365 level. As I said before, this is a major support. We have tested it, once here, twice. I wouldn't be surprised if we test it again. But that being said, we don't know that for sure, and I'm still very bullish medium to long term. So that's why I've been slowly accumulating these futures. So they will expire in December of this year. And I will likely accumulate more if we get down to this region. However, what I'm doing is I'm hedging my bets. So what I've done is although I've accumulated these long-term futures, when I say long-term, I mean sort of 3 months down in this zone over here, I've been actually adding perpetual shorts. So these are Ethereum shorts. I have about 25% of my futures position in shorts at the $392 level. Now, why am I doing this? Well, because the price action is very uncertain, and short term, I wouldn't be surprised if we see another move down. After all, the short-term 4-hour time frame is bearish. We have a lower lows, lower highs, lower lows, lower highs. Now, I'm just going to get rid of a couple lines here to be able to show you what I'm looking at here. So if we do a triangle here just to mark this, this descending wedge, right? So this descending wedge is a bullish pattern, okay? So I expect that we will have a bullish breakout of this descending wedge at some point, whether it's right now and we go to test the sort of $407 level, or whether we go down to 360, or maybe even have a spike below this and then break it. I think it's very likely that we will break this descending wedge. And that is simply because we are in a very strong bullish and daily uptrend. Okay? Now, that being said, what often happens when you break these descending wedges is that you create a parallel channel. So if we get rid of this descending wedge for a second here, which you can still see is marked by this blue line here and this red line here, what might happen is that we get a parallel channel. So I'll draw that out for you guys. So you see this blue line over here, which I used as support here. So if we break out of this descending channel and the bulls don't have quite as much energy as we might have wanted them to, then we might have a descending diagonal channel form in which we potentially find resistance at the sort of $405 level. So that's why I personally have my perpetual shorts, first of all at $392 level, but I'm kind of laddering them in between this level and 405. And they represent, if all of them get filled and we get to about, I think I have them all the way to the $408 level. If all of these shorts get filled, they will represent about 70% of my whole Ethereum futures long position. Remember, which I laddered between $400 and about $380. So what that means is that if we come to this $408 level and then we correct, coming all the way down, for example, to 365, my futures position will be hedged. In other words, I won't have to, close it out. I won't have to make any emergency stop losses because it's hedged with this short. And also, in addition to that, if we do get to the $410 level and we start coming down, I will likely start taking small profits on this Ethereum short to benefit from short-term volatility. And then furthermore, if we really do break the $410 level, my stop loss for this short is $425. So the interesting thing about this is that it kind of sucks because, I lose money on this short. But if we get to the $425 level, that gives me a lot more confidence that we have positively broken out of this whole structure here. In other words, if that happens, we will have a descending channel here which will have positively been broken out of. It will be hard to justify that we're seeing another big move down if that happens. So that's my basic trading plan for Ethereum. Now, if we come and break below the $360 level, it's going to be concerning because once that happens, we don't really have solid support until quite a bit further down. But we're not there yet, so let's not talk about that just as yet. But basically, yeah, I'm stopping out some of my shorter term positions at the sort of $350 level if that happens. Okay, so what I always do in these videos is to look at Ethereum news and have a look how bearish this is. Cointelegraph Consulting, a storm is brewing for Ethereum. Market wrap, Bitcoin dips to 11.6K, ETH options predict price below $400 by end of year. By the way, I read through this. This is a little bit overhyped, and it also really doesn't mean all that much because we are at the $400 level right now. And according to this article, they don't expect it to be much lower than 400. And then the third result here, Ethereum could lose 50% in the next 12 months. Ethereum founder sold his ETH for $700. This happened a long time ago. This is about Vitalik selling his ETH for $700. So obviously that was last year or the year before. And it's just kind of funny that now they're publishing these articles just when Ethereum sort of starts dipping a little bit, or at least these are the articles which are ranking on Ethereum. So this is very typical. When the price starts retracting, people get scared. People are like, hey, this whole massive bull run is not happening anymore. For the last 7 days, we've seen decreasing price action. But this is not the time to be scared. This is the time to start accumulating positions. And as I mentioned, I've been accumulating in the 400 to 380, and I will most likely accumulate more more future longs over here, while also taking some profit on my short-term perpetual Ethereum shorts. Now, that being said, there are some concerning statistics. So one thing which I want to point out here is this chart. So have a look at this. This represents the miners balance. In other words, the amount of Ethereum which miners hold, which Ethereum miners hold, right? And it is admittedly concerning that we've had a massive drop over the past month. So according to Cointelegraph, over the past 30 days, the collective balance of Ethereum mining pools has shrunk by more than 80,000 ETH, which suggests some concern among the ETH mining community about the coin's short-term price potential. So it is worthy to note this is just about the short-term price potential. And if you look at the previous sort of big dips in miner balance over here, you can see that it was dipping as actually the market was going up. And it reached a bottom over here in 19th of February 2020, and that did pretty closely mark the local top, and we saw a big dump from there. And then also what's interesting is as we saw the miner balance pool increase sort of quite drastically, the price was going up, up, and up, and then it had a dip here again, and admittedly there was another small dip in price here. It started going up again, and as it started dipping, the price also started dropping. But this was actually a really good sign over here. Between 5th of June 2020 and 19th of July 2020, you had a monster growth in the mining balance. And of course, this led to a massive move up. So it is a bit concerning that we've had this significant drop in miner balance. We are seeing a tick up here, but if these previous statistics are anything to go by, it is quite possible that we see another dip here. That being said, we've already had a dip from 437 down to sort of 380. So this already represents a almost 15% decrease in price. So now the real question is, do we see another dip? And as I say, I think the $360 level is an important potential support. And if we do break the $360 level with any sort of conviction, I'm certainly going to start changing my short-term perspective. As I say, right now, I'm kind of on the sidelines. I'm generally bullish long-term. That's why I have these futures. But short-term, I'm much more skeptical. And that's specifically coming down to the $360 level. Now, if we have a close below here, especially a weekly close below here, the next major support we can see just from this chart is about the $300 level. So, that's quite a big jump from there. That'll be another, well, it's not that big, 15%. But until we get below this $360 level, there's really no reason to be bearish medium to long term. And as mentioned, we already have had a 15% dip. It's not impossible that we come down to the 360 for a 20% dip, and then that would simulate some of the dips that we had in the past year as well, when the Ethereum miners balance also decreased. Still, this is reason for concern. Now, this article, according to Ethereum World News, Ethereum could lose 50% in the next 12 months, according to a crypto analyst. So the crypto analyst in question is Timothy Peterson, who posted this tweet where he says, pessimistic about Ethereum price for foreseeable future, long-term growth rate only supports average annual price appreciation of 30% per year. Now, someone here, actually he hasn't answered any questions here, which is never the best sign for an analyst when people are questioning his analysis and he's not responding. So we have Mowgli Asia here asking, what about the DeFi craze? And do you believe ETH is basically an index for the DeFi space and will therefore appreciate accordingly? I definitely think that there is reason to believe that, considering that Uniswap represents most of the Ethereum transaction volume right now and is, of course, a big boost and a big indicator of how the DeFi space is evolving. And then, of course, we have Ovidiu Ficlenescu saying, I don't know what parameters you use for computing Ethereum's Metcalfe value, but from the graphs, I see a lot of it is based on hash rate. If that is the case, it is a pretty dumb way of looking forward, as Ethereum will move to proof of stake. Please stick to Bitcoin while I'm filling my Ethereum bag, sir. Now, the Metcalfe law is basically a way of measuring the value of an asset and trying to determine its price based on that value using certain parameters. Now, again, he hasn't responded as to which parameters he's using here. But according to this article, Valuing Bitcoin and Ethereum with Metcalfe's Law, I'll link to it down below. It's a Medium article by Jacob Franek. Now, here, of course, he talks about the unique active addresses. He says, because Etherscan does not have data on unique active addresses, we're forced to rely only on the number of daily transactions as a proxy for network usage. Now, if we go to Sentiment here, sentiment.net, and we go to daily transactions here, you can see that the volume of daily transactions, this is of course over the past, I'm not sure, I think it's the past year, that's right. You can see that the daily transactions actually has been sort of dipping. We had a couple spikes here in the 11th, 12th of July, the 4th of July, but you can see a general sort of downward trend ever since the 13th of June. So that's June, July, August. That's 3 months of decreasing transaction volume. And this is, of course, the NTV ratio, or using transaction volume. Guys, you can sign up for Sentiment. We can leave a link in the description below. It's a pretty cool platform for looking at a whole range of statistics. But I'd like to point out that this is probably not the best way to measure Ethereum price. I mean, if we just go, for example, back here to 26th of January 2020, you can see we had the exact same thing. We had a steady decrease. Now, admittedly, when we reached the bottom here, that did mark a local Ethereum top, but it was sort of steadily decreasing. And look, we had a major decrease in transaction volume at the exact bottom for Ethereum. So I don't think this is a reliable indicator of Ethereum price. And if he is not willing or not interested in responding to tweets, then I'm just generally a little bit skeptical about the validity of this research. And then if you go on Reddit here, what is your opinion on using the Metcalfe's law to value the Ethereum network? And we have one user saying here, the Metcalfe's law can theoretically model the intrinsic value of the Bitcoin Ethereum networks, not the actual price. So he uses the example here that Metcalfe's law predicted Facebook revenue, but not Facebook earnings and share price. So indeed, if you're just looking at the value of the network, it's not necessarily an indicator of price. And he says here that with the Metcalfe law, they attempt to support their misguided hypothesis by erroneously using the transaction volume as a proxy for user count. This fundamentally breaks the definition of Metcalfe's law. And in terms of user count, you can of course look at the daily active addresses, which I think is probably a good proxy. And you can see that we have had a dip basically over the past 2 weeks in terms of the daily active addresses. But this is not a major dip, okay? I mean, look, we had this exact same similar type of dip back here on the 29th of June. We had a dip to the 5th of July. We had a sort of another dip between the 15th of July and the 20th of July. And these marked the bottoms, you know? These didn't correlate with any lower prices. So I really don't think that a small dip in Ethereum active addresses is relevant in terms of predicting the price. All right, guys, so that's it for this Ethereum technical analysis. I hope you enjoyed it. I myself, I must admit, I've only personally started using futures recently. I've been margin trading for quite a while, but I like the idea of using these long-term futures and hedging them with short-term shorts on Ethereum. I personally use Binance. Of course, you can check out link in the description below. We currently have a promotion with Binance whereby if you trade for $100 or more, you get a free $10 Bitcoin bonus. And this is only until, and grab this while you can because it's only until September 19th, 2020. Okay guys, that's it from me from today, and I look forward to seeing you in the next one.